Hey, what's going on, everybody? Today we're talking RACKSPACE Technology stock, ticker symbol RXT. As a disclaimer, this is not investment advice. This is just a research video that I put together meant to be educational as well as entertaining. I'm going to drop us into a few different news clippings and articles surrounding the company as of recently. First, we're going to take a look at what RACKSPACE Technology is all about, its operations. Then we're going to look at an interview with the CEO of RACKSPACE. Then we're going to take a look at its stock. So thanks for tuning in. Please continue to like, share, and subscribe. Hit that notification bell. I really do appreciate it. We've had a pretty crazy month so far in September in the market. A lot of selling off in technology. So thank you for tuning in. Please enjoy.
There are a number of data centers and data center providers. Each of them have UPSs, generators, and so forth. But it's not the infrastructure that really sets one data center provider apart from another. It's how they operate it. What makes RACKSPACE unique is our operational discipline, which is built on Lean Six Sigma methodologies.
There are several standards we've implemented around the globe. Whether it's our commitment to workplace organization, meticulous cabling, or how we respond to customer issues, we've got a process in place.
Racker walks into a data center. They know where the ladder is, they know where the cart is, they know where their tools are, they know where everything has to be or should be, so they can provide that time-sensitive service that our customers deserve because their customers are relying on it.
All these processes are documented, reviewed by experts, and stored on our wiki.
The wiki here at RACKSPACE is like no other. It is where we go to look for how to do our policies, our procedures, if it's racking and stacking, if it's doing cabling, if it's doing all those things that really matter, that are integral to our business in the data centers, that's where we go.
Even though we have well-communicated, well-documented, and well-established processes, things sometimes just don't go to plan. And in those cases, we conduct a root cause analysis.
We're really looking for a better understanding of how did we allow such things, whatever it is that happened, to actually occur. What processes, what policies, what procedures, what systems need to be changed in order to improve the overall outcome of similar type maintenances.
Our entire focus is around being world-class and driving continuous improvement.
It's why we are the ones that people select. It's the reason why customers select us.
A new IPO. Yep, it's the second time entering the public markets. Leslie Picker's got more on this. Les.
Hey, Melissa, that's right. Just in case you think you've heard that story before, it's the second time Apollo-backed RACKSPACE has disclosed its IPO prospectus today. The company provides cloud services and posts about $2 billion in annualized recurring revenue. Now, the first time it went public was back in 2008. It was then acquired in an LBO by Apollo. Today's filing did not disclose the size of the deal, but reports indicate it could value the company upward of $10 billion, including debt. So they're tapping the public markets now. It's one of those things where we've seen a huge slew of IPO news this week. We've seen news, of course, from RACKSPACE, Palantir filing confidentially for its IPO. And then we've also heard from the parent of Quicken Loans, which is expected to have a multi-billion-dollar IPO as well. Now, RACKSPACE does plan to list on the NASDAQ with the ticker symbol RXT. Goldman Sachs, Citigroup, and JP Morgan are managing this deal.
So we're pleased with that. You know, this is one of the largest tech IPOs in the year. And the market, as you mentioned, the market fundamentals are fantastic. Right in the middle of this tectonic shift in the industry to multi-cloud. We're the leading pure play multi-cloud solutions company, the cloud experts. So we're really excited actually about the future.
How are you going to balance sort of investor interest in how you leverage that huge tailwind, as you point out, but also start to chip away at some of the debt?
Yeah, look, in terms of the momentum that we've got tremendous momentum in our sales performance. This past quarter, our sales bookings grew 107% year over year. We're a very profitable company with terrific cash flow. In terms of the debt, we underwent an LBO in late 2016. Leverage is not a concern for us whatsoever. Our company actually has 95% recurring revenue, very strong free cash flow generation. So, we can operate this business with a comfortable level of leverage over the long term. Now, what we will do is we're going to use some amount of the IPO proceeds to deleverage the company. Over the long term, you can kind of think about us maintaining net leverage levels in the 3 to 4 times area with the ability to flex up and down depending upon opportunities in the market.
Kevin, you mentioned that the end markets are thriving right now, and it seems like a very hot area of tech. But what has changed, I guess, during the time you've been private, now that you're public again, in terms of the competitive set and in terms of those you're going to be going up against as you have, this slightly different financial profile?
Yeah, look, great question. And you're exactly right. The market's hot, and RACKSPACE Technology is a completely transformed company. Before the take private in 2016, we actually competed with AWS and the hyperscalers. Today, we do not compete with them. AWS, Microsoft, and Google are actually our strongest partners. We've also done 4 acquisitions since the go private that have really revolutionized all the solutions we offer. So now, we're the leading pure play multi-cloud solutions company. We've got 120,000 customers in 120 countries and fantastic momentum for the future.
Kevin, Julia Borston here. A question for you about your customers and their plans to do remote work as the coronavirus, as we start to find solutions to the coronavirus. How many of those customers do you expect to be in an all remote solution, whereas sort of some will be half and half? And what does that mean for your business and the services you're offering to them?
Yeah. Hi, Julia. Great question. So, for our business, the pandemic has really, accelerated years of digital transformation and kind of made it clear to customers that, having a multi-cloud strategy is no longer a nice to have. So what we've seen from customers during the pandemic is an urgent need for them to save money. Multi-cloud does that. Customers want to scale up and scale down their business volumes. And also customers want to pivot to new business models, right? A lot of the old business models don't work, as you mentioned, in remote working. And then multi-cloud is fantastic for that. So, we're seeing 75% of businesses today having, predominant kind of remote working. And going forward into the future, we expect that to continue to accelerate, which is, great for our business.
It's always nice to hear from a CEO regarding their company's moves that they're making, especially when it comes to IPOs. Let's take a quick look at this article from the Motley Fool. Report Amazon in discussions to buy minority stake in RACKSPACE. Anytime a company like Amazon is hinting at buying into a smaller company, it's pretty gnarly. Owning a piece of RACKSPACE would theoretically be advantageous for Amazon Web Services, AWS, the lucrative cloud computing business operated by the retailer. RACKSPACE's core business is the leasing of server space for clients wishing to manage data on the cloud. This activity makes it a frequent business partner of AWS, although there are partnerships with Alphabet, Google, and Microsoft as well. So the sources interviewed did say that there is no guarantee a deal will be reached with Amazon. They added that if an agreement is reached, negotiations over its specifics could last for 1 or 2 months. The aforementioned parties have yet to comment on the article. Not surprisingly, shares of RACKSPACE zoomed higher in trading on Monday, rising by over 10%. So let's take a quick look at this news article regarding the latest details.
Seeing pretty significant gains on Amazon, but RACKSPACE Technology, that stock up just around 13% right now. And this comes after a Reuters report that Amazon wants to buy a minority stake in RACKSPACE. I'm just curious, just your thoughts, because this is an AWS play, so a cloud play, but it goes hand in hand with what we've been talking about over the last several weeks. And that's just the fact that the cloud is so important right now, especially in this work from home type of environment that we're all in.
Yeah, and Shauna, just how many ways you can slice the cloud pie, right? I think that has been the most revealing nugget when you think about cloud services and how, Rackspace is a perfect example of being a top competitor, but also a top partner of a firm like Amazon. I think this report is very interesting and timely because let's remember, back up a little bit. Rackspace was private, is backed by Apollo Management. They went public again on August 5th. We actually spoke with the CEO on the Move, our earlier program, and I did ask him about the sort of multifaceted nature of the business and why a competitor like Amazon wouldn't just create this sort of server data transfer technology and the consultancy side of things that Rackspace provides. And he sort of said, that's an interesting point, and it's something that we're trying to explore and find different ways, to really serve our partners better. What I kind of interpreted that to mean, and that's why this news isn't necessarily a shock, is that to be honest, I don't know if they can go it alone for that much longer. What's very clear right now, though, is investors are very happy. The stock did climb as much as 19% at one point, and that's a huge kind of contrast to the IPO when shares actually fell 20%. Investors were not necessarily exuberant about the possibility of Rackspace carving out this somewhat niche space during this time. What I'm curious about, of course, the terms of the deal, the negotiations are ongoing. We don't have any concrete evidence just yet that this will actually happen, is whether there would be an exclusive clause, right? I'm curious to see whether Rackspace would only be able to work with Amazon, or right now they have about 150,000 different partnerships across the world, including the likes of top competitors like Google and Microsoft. So I'm curious to see if this is just another way of Amazon trying to secure its positioning, especially during an environment where year-over-year gains seem to be slowing down. It seems like that run-up that we had seen over the last few quarters, there's a bit of calibration happening in the market.
Pretty interesting stuff. Right after the company IPOs, Amazon's already thinking about buying into it. So let's take a look here at Seeking Alpha. Rackspace assists GitLab drive fast application development on Google Cloud, as well as another article from Seeking Alpha. Rackspace Technology collaborates with Condo Rail Services. So there's just some more news after news coming out about this company. So I can appreciate that the IPO is happening at a time where things are kind of hectic, maybe a little uncertain. So let's take a quick look at my trading view, the trading window from the IPO of Rackspace. I'm going to highlight some levels of support down here in the 15s, the 17s. It had a nice run to its earnings, and then it had a pullback. It touched a level of resistance in the low 20s. So there, it was looking like it was going to take off. I'm going to make a level of resistance just for myself. This is just something that I do time and time whenever I'm looking at a stock and I'm looking at its price movement, its activity. I want to see it do something just for peace of mind. I like to see it get above this mid-19 level. If it can break out of this mid to high 19 level, then I can see some more stair-stepping patterns of ascension. But until it does that, then I'm going to kind of treat every opportunity that it's below this level of resistance as a buying opportunity. So I'm just highlighting here again where it touched the low 20s and then it had a pullback on its earnings, and to where it's currently at in the 18s. So again, anything can happen with the stocks, right? It can go any which way, but I'm just kind of noticing that if it can get above this mid 19 level, and if it can stay there, and if it can become, if that level of resistance that I've highlighted in the mid 19s, if that can become the new level of support, then I could take this stock a little bit more serious regarding some levels of ascension and some levels of growth. But until it does that, like I said, I'm going to treat any opportunity that it's below $20 as a great buying opportunity. I believe in what this space does, right? The clouds, these cloud companies, that they offer something to major companies like Amazon and Google as well. They're just nice companies to complement these mega cap companies. So I can appreciate what this company is all about. I do like RACKSPACE, so I am a RACKSPACE bull. I think I'm going to leave it here. Thank you for your time. I really do appreciate it. If there's another company or ETF that you would like me to research, please let me know. Drop it in the comment section below. Y'all been really cool about hitting me up, telling me what you like or what you dislike. I appreciate all opinions. I really do. So thank you again for your time. Please continue to like, share, and subscribe. Hit that notification bell so that way you can stay tuned. I'll be putting out some more videos. I'm going to highlight some different market capitalizations. I'm going to starting with mid-cap, large cap companies, mega cap companies as well. But I'm going to try to do a few different companies from each of the market cap types and put them out in series. So stay tuned. And until the next one, I will see y'all later. Take care.